Welcome to the Deep Dive. This week, we're going to drill down into the Japanese stock market outlook. We're looking at the week of May 26th to 30th, 2025, mostly using the Tokyo Market Weekly report. The idea here is for you to get the key drivers, without getting lost in all the detail.
Exactly. We'll cut through the noise, focus on what's likely to actually move the markets this week.
Right. So just for context, the JP 225, it's down almost 7% year to date. That sort of reflects worries about Japan's economy and, well, those ongoing U.S. trade policy jitters.
Yeah, it's definitely a factor. And it's a mixed picture, isn't it?
It really is. You see some resilience, like in traditional names, Mitsubishi, Hitochu. They're holding up okay.
But then you look at tech.
Oh, yeah. Tokyo Electron, for example, is down over 35%.
Ouch. Yeah, that shows how selective the market's being. Very focused pressure points.
Okay, so let's unpack the week, starting with earnings. What's on the radar?
Well, the calendar itself is pretty light this week, but the quality of what does come out is crucial. Take Tokyo Keiki. They've just put out really strong full-year numbers. Revenue up 22%, net income jumped 67%.
Wow, that's significant.
It is, and their earnings per share beat expectations by about 11%. What's really interesting for you here is why. Their profit margins expanded nicely from 4.8% to 6.6%.
It's better operational efficiency driving that, even with the headwinds.
Exactly. It shows some Japanese companies can outperform even now.
There's always a but, isn't there?
Well, yeah. Here's the paradox. Despite those great results, Tokyo Keiki's stock actually fell 7.4% last week.
Fell after those numbers.
Yeah.
So that just shows how heavy the broader market mood is right now.
Precisely. That disconnect, it really tells you something. Individual strength is getting overshadowed by wider pessimism. So for companies reporting this week, we'll be watching, can they keep revenue growing? Can margins keep expanding? And what's their guidance look like?
Right. Individual wins aren't lifting the boat. Okay, let's pivot to the economic data. Monday, we've got the leading and coincident indexes. What should we glean from those?
Think of them as economic momentum indicators. They're expected to dip slightly. If they do, it sort of confirms this sluggishness picture.
Got it. Then Wednesday, foreign investment flows. Why is that one particularly important right now?
Well, with all the global trade uncertainty floating around, seeing where international money is going or if it's coming out, that's a key gauge of confidence in Japan overall.
Okay, makes sense. Thursday looks like the main event, though. Consumer confidence, Tokyo inflation, industrial production, retail sales. A lot hitting at once.
It is a data dump, yeah. But each piece is vital. Consumer confidence tells you about domestic demand. Tokyo CPI, that's a big leading indicator for national inflation and for what the Bank of Japan might do.
And the production and retail figures.
Yeah, those are maybe the most critical right now. Retail sales are expected down again, minus 0.3% month on month after falling 1.2% in March. Another drop really fuels those slowdown concerns.
And Friday doesn't sound much better, with housing starts forecast to drop dramatically.
Yeah, down over 18% year on year expected. That's a huge swing from recent growth. It signals a pretty significant cooling in domestic demand there.
Okay, so bringing it all together, how does this feed into the Bank of Japan's thinking? People are generally expecting a rate hike in Q3, right?
That's the consensus, yes. But this week's data could shift that. If we see really weak numbers, especially on the consumer side or retail, they might pause, hold off on hiking.
Which would probably mean a weaker yen. Good for exporters.
Potentially, yes. On the flip side, if that Tokyo inflation number comes in hotter than expected,
then hike speculation ramps up.
Exactly, which could boost the yen, but pressure domestic companies that carry a lot of debt. It's a very, very delicate balance for the BOJ.
And hanging over all of this is still the U.S. trade policy issue. It's not on the calendar this week, but it hasn't gone away.
Not at all. It's a constant overhang. Japan's own GDP growth forecast for this fiscal year was revised down, remember? Partly because of expected tariffs.
Right. About half a percentage point impact, wasn't it?
Something like that. And the auto sector is particularly exposed. Those potential 25% tariffs are a major worry. So any comments from companies about exports will be watched very closely.
So for you, the listener, trying to navigate this, where are the potential plays? What should you be looking for?
Well, if the domestic data surprises to the upside, you might look at companies focused more internally in Japan.
Okay.
And like we saw with Tokyo Keiki, focus on quality growth. Companies with strong balance sheets, improving margins, they might hold up better. And definitely keep an eye on currency-sensitive sectors as that BOJ speculation ebbs and flows.
Technically speaking, the JP225 drop means some things look oversold, but it sounds like a real bounce needs some good news from this week's data.
Yeah, sentiment is fragile. This week's data will either, reinforce the caution or maybe provide a bit of relief.
Okay, quick wrap up then. Watch the economic data, especially Thursday's batch consumer, inflation, retail for clues on the BOJ, and overall mood. Strong company results aren't a guarantee right now. Analysts still see potential upside for the Nikkei 225 by year-end, maybe towards 45,400.
Which is about 15% upside, yeah. But it needs better economic news.
Right. And foreign investors returning could be a big boost, but they probably need trade clarity and signs of recovery first.
That sums it up nicely.
So here's a final thought for you to chew on. With this mix, we're seeing strong individual companies, but worrying economic signs. What single piece of data coming out this week do you think will be the most crucial signal for where the Japanese market is truly headed? Something to ponder. Thanks for joining us for this deep dive.